Welcome to the condensed version of the daily video update, where I'll go over the action in the market from Monday, August 7th, and then see how things look for August 8th. For those of you that watched the full-length video, I had to record that on Zoom. From the time I recorded that video until right now, I've been able to fix the power unit in the computer that I use to record these videos. So I'm back to using the normal computer again, and hopefully it'll stay that way. Nothing but a little WD-40 and some duct tape, just like my dad always used to say. All right, first of all, the thumbnails. I posted those on the YouTube community tab over the weekend, and I found out exactly about what I felt. Nobody cares. I really didn't have any response to that. My idea is to focus on content, not entertainment. And I like to do that, and I'm not a real artsy person, except when it comes to music. So I'm just going to go ahead and use whatever thumbnails I think are best. If any of you do ever want to interject any opinions about that, by all means, go ahead. Another thing that I'm considering right now is I'm possibly thinking about maybe doing a free online course, maybe in September. I don't really know what it will cover right now. I have a number of different areas, from technical analysis to different strategies to mental analysis. Those are the other courses that I teach. I might pull a little bit from those courses. I don't know how long it would be, at least maybe an hour. Maybe it might span over a few days. But right now I'm just putting the word out there and asking people if you have any interest in some kind of an online class, and it will be free. I would do it using Zoom or Messenger or maybe even both. And then I will record this, and so if you can't watch it, you can come back and tune in later. Just let me know if that's something that interests you. All right, let's go back and talk about what happened. The S&P was able to regain 4,500 in Monday's session. Now, it wasn't a session filled with a lot of conviction. We did go up, and a lot of the rise, especially at the end, was probably due to short covering, as the people that were hoping the market would go down were starting to lose money, and they had to buy to close out those positions. Also, value outperformed growth, especially early in the day. I was watching it where value was up almost 1%. Growth was virtually unchanged, and it kind of stayed that way for most of the day. We want growth to outperform value on good, solid up days. On an intermediate term basis, we still have the bullish percent index for the S&P 500. It's still extreme, but it is coming down. So it's declining overall there. On a short-term basis, we have the CCI based on 14 periods and our stochastics, which is always extreme one way or the other. The dollar was up and interest rates were also up. And we have one of our yield curves, the 30 to the 5-year. It's gone back to being normal, but we've seen this before. We'll have to watch this over the course of the next few days or week or so and see if it stays that way. It's not a major yield curve that people really pay attention to. I just track it just to see what's happening. So we'll see. Is it going to stay this way, or are we going to go back to being inverted again? Sentiment is still positive at 72, where it ticked up from 69. Our trend is positive, but this is strange. On Friday, we had a down day. The green line went up. On Monday, we had an up day, and the green line's back to going down. The ADX is below its moving average, but it's still above 20. So we're in a trending environment with a weakening trend. Our bias is positive because of the up day, and I've kept our momentum at mixed. We're not really solid in the positive camp. The economic reports that came out, we just had one, and it was consumer credit, not a real big market mover, where it came in at 17.9 billion, much more than the 13 billion they had expected. Here's the intraday chart, where we gapped higher, and believe it or not, the pivot point was right about where we opened. It's kind of strange to see it so far away from the unchanged level, but this ended up providing support. We went up and then back down, and then we just drifted higher, and we ended up closing right at the high, a little bit under R1. Looking at the growth to value ratio, it was never positive. When we were going up, it was going down, even though it recovered a little bit later in the day. We're watching the skew index. We're getting up into this red area where the market is expecting some kind of a big move. And if you look at other times when we spiked up and started coming down, sometimes it was a top, sometimes it was a bottom, sometimes the market just kept going in that same direction. Looking at our trend, where we do see the ADX dropping below the moving average, the green line is declining and the red line is declining as well. We're seeing pretty much that same thing with our short-term ADX. We're below the moving average. The green line is declining, but still on top. However, the red line continues to decline. The daily chart, nothing was really decided here. We were not able to get back above this pivot point. On the bottom, you can see where volume was well below average. Here's some moving averages that we're keeping an eye on. Usually the first line of defense in a pullback is the 20-period moving average. We're right around that level. We closed a little bit above the exponential moving average, but most people tend to use the simple moving average, which is the blue line. We'll have to see if we can regain that. If we start to fall, we'll then be looking at the 50-period moving averages. We lost the Pring bottom fissure. It's crossing back below the red line, so that signal is no longer being generated. Here's our trend study. We're right in between this shorter term trend line and this little longer trend line. If we start to fall, we'll be looking at support at right around 44.50. Now we're continuing on in our new 50-day cycle where we topped out. It started on August 1st and we've been seeing some difficult times since then. We're just wondering if that will continue. We're also keeping an eye on the 61.8% retracement level for the NASDAQ. So far, this level is holding. We're also holding with the NASDAQ 100 with the previous high set back in 2022, maintaining a level of support. As long as we stay above that, there's still hope for the market. If we start to break down below that, things might become a lot more negative. Looking at our long-term chart of the S&P, we're right on this resistance line and we're pretty much at the same place with the NASDAQ 100. Also keeping this in mind, this is longer term, a ratio between the NASDAQ 100 and the Dow where we're coming up to a really high level. We're wondering, have we topped out and we'll start to come down? Other times that happened, it was pretty negative. Now, it doesn't mean it's going to come straight down, but we just want to keep an eye on this. So what's our outlook for Tuesday? There'll be a lot of earnings reports, and by the end of the week, most of the S&P 500 companies will have reported. There are no more scheduled Fed speeches for the month of August. I thought there were none for the whole month. It turns out there was one on Monday. The technicals are negative still, and right now it looks like we're just working off this short-term oversold condition that we had, but we're still turning more negative, but at the same time, support continues to hold. The economic reports coming out on Tuesday will get the NFIB Small Business Optimism Index, as well as the trade balance report, and wholesale inventories will be coming out. We're keeping an eye on the geopolitical events, but we're mostly fixated on inflation and interest rates because that's what the market is really keyed in on. Here's the updated calendar for the week. Please note that on Thursday, we're going to get the CPI. That's the big inflation gauge. And then on Friday, we'll be getting the PPI. The Stock Traders Almanac for August 8th, we're neutral to positive with the Dow and S&P. We're neutral to negative with the NASDAQ. We're also wondering, are we starting to finally pass this time of seasonal weakness and maybe see a little bit of a bounce for the NASDAQ? Also, we will be on the 6th trading day of the month where sometimes we see weakness, where for the NASDAQ we're watching the dashed blue line, for the S&P we're watching the dashed green line. So our scenarios for Tuesday, we're going more towards the down one, but I wouldn't really take that serious unless we really start to break below support. So far that is holding. I wouldn't really go with the positive scenario right now because all of our charts are pretty much negative, and I definitely wouldn't go with the sideways trend for right now because even though the ADX is weakening, being that it's below its moving average, we're still above 20, and that suggests that we're in a trending environment. What are the warning signs? The convergence of the short-term bearish signals, it looks like they had come together and they're starting to push the market lower. We're wondering if that's going to continue or have we pretty much passed that. Our longer-term trend signals on the weekly chart, they may be signaling a top. We don't know that yet because we're right on top of that line. Seasonally and historically, we typically are weak in the month of August. The S&P 500 oscillators are negative, as is the oscillator for the NASDAQ 100, and we're watching that one. The VIX, even though it's been going up, is still showing that there's not a lot of fear in the market. The cumulative new highs, new lows for the NASDAQ are showing weakness. The 3-month yield is above where it was back in 2007. We're watching to see if that starts to come down. That's what happened back in 2007. If it comes down now, is that going to give us some kind of a warning sign? S&P 500 growth is weakening, but it's still in an uptrend. The weekly pivot that I talked about that we hit a week and a half ago, we hit that level and we've been pretty much declining since that time. The parabolic SAR is negative and the vortex has switched over to being negative. The Pring bottom fissure signal has now gone away. And we're in earnings season, but we're coming to the end of it, at least as it applies to the S&P 500. The positive signs. We do have seasonality and setups that are in the background, and I went over those in the weekly video. The long-term daily special K chart is positive. The weekly chart is still negative. The longer-term equity put-call ratio is positive. The S&P is still above the downtrend channel upper line. We're still in a risk-on posture, even though that ratio isn't really advancing right now. Lower price levels so far have been providing support. Is that going to continue? The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're above longer-term resistance, but we're having a hard time getting through daily pivot resistance. The Staples to S&P 500 ratio is declining. The Russell and small cap index, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive, but mid cap growth is kind of losing a little bit of strength these days. The financial sector has generated a recent golden cross. So our conclusion, we're negative, but right now it looks like we're just working off this short-term oversold condition, but we're still negative overall, yet support continues to hold. Is this going to continue? We're waiting to see if we can go up, or are we going to break down? In the short term, we're negative and working off being oversold. Intermediate term, we're still negative. Long term, we still remain positive. Thank you. I hope you have a wonderful day, and I'll talk to you in the next video.